Welcome to This Explainer. Today we're diving straight into a systemic blueprint aimed at solving a massive modern crisis, wealth inequality. We're pulling from a seriously comprehensive report by the Aspen Institute Financial Security Program. And this isn't just a bunch of abstract economic theory. It's an actual roadmap with 101 concrete systemic solutions for inclusive wealth building, designed to help literally everyone build wealth from the ground up. To really get why this matters, we have to start with this staggering number: 2%. According to the data, the bottom 50% of U.S. households own a mere 2% of all household wealth. Think about that for a second. Half the population is fighting over just a tiny sliver of the economic pie. In practical terms, that means nearly 13 million households actually have negative net worth. They own more than they own. They're basically locked out of the wealth building game before they even get a chance to play. And here's the flip side of that reality. The wealthiest 1% of households control a massive 33% of that pie. So we're looking at a system where wealth is just intensely concentrated right at the very top, creating this huge gap that those 101 solutions are meant to bridge. It's a systemic imbalance, and honestly, it dictates how millions of families navigate their everyday lives. Interestingly, this data debunks a really common myth. If you're feeling financially behind, you aren't failing as an individual. Look at this. Despite the longest economic expansion in U.S. history, median household wealth actually went down, dropping from roughly $149,000 in 2007 to just under $122,000 in 2019. The typical family literally lost ground over those 12 years. Big macro trends like the rising costs of healthcare and education combined with stagnant incomes are what's driving this decline.
Section 1. The 5 functions of wealth. Why it actually matters. Let's look at exactly what wealth does for a family.
The source breaks wealth down into 5 primary functions. First, it gives you resilience against income volatility. Second, it lets you invest in your own economic mobility, things like buying a home or starting a business. Third, it enables intergenerational support so you can pass stability down to your kids. But points 4 and 5, that's where it gets profound. Wealth directly supports your physical and mental health by reducing the crushing anxiety of debt. And finally, it gives you ownership, voice, and control over your life. At its core, wealth isn't about greed. It's absolutely about freedom and agency.
Next up, the systemic blueprint for wealth.
To fix this massive gap, we need to understand how wealth is actually built over a lifetime. It's a step-by-step path, almost like building a house. It starts with the absolute precondition of financial stability. Then you move into phase 1, amassing investable sums of money. From there, it branches into purchasing affordable assets and accessing consumer-friendly financing. And finally, you have to protect that wealth. It's an entire ecosystem. If even one piece is missing, the whole wealth-building process just stalls out. Let's zoom in on those first 2 critical blocks. As the report points out, you simply cannot build wealth without short-term financial stability. Period. This means having routinely positive cash flow and being free from harmful debt. Only when that foundation is rock solid can a household take the first real step on this timeline, which is amassing investable sums of money. Because, let's face it, you need surplus cash to make investments, plain and simple.
But here's the big question. How do families who are just struggling to get by amass those sums? Well, the report suggests some pretty radical systemic solutions to jumpstart this. For example, they talk about baby bonds or universal children's savings accounts. Imagine providing newborns with a publicly funded trust, basically a wealth starter kit right out of the gate. Another super innovative idea is a citizens' wealth fund. This would be a state-managed investment fund that pays out regular dividends to all citizens, giving everyone a literal share in the nation's economic growth.
So once you have the capital, the next crucial phases are purchasing an asset and then maintaining that wealth. The source stresses that we desperately need affordable assets in the market, think starter homes or low-cost higher education, along with consumer-friendly financing to actually buy them. But equally vital is that final step, wealth protection. Households must have consumer protections and insurance in place, right? Otherwise, their hard-earned wealth could be completely stripped away by market fluctuations, natural disasters, or a sudden health crisis. Section 3. Innovative paths to ownership. Let's see how we deploy money into things that actually grow in value. This brings us to a fascinating point from our source material about the pure hustle required to start a business with low capital in places like the Philippines. It poses such a critical question for aspiring future CEOs everywhere. How on earth do you take the leap into entrepreneurship and asset ownership when you're starting with practically nothing? It's a huge universal challenge for that bottom 50% we talked about earlier.
Well, the Aspen report outlines some brilliant solutions for those future CEOs and everyday investors. It points to expanding support for CDFIs and MDIs. These are community-based and minority-owned financial institutions that actually lend to low-wealth entrepreneurs on favorable terms. It also proposes scaling up shared ownership of business equity, meaning workers could actually own a piece of the company they work for. And for folks with very little capital, it suggests expanding fractional shares investing. This allows people to buy tiny portions of stocks or even real estate for literally as little as $1. A total game changer. So why does this all matter to you? Because these financial innovations make it entirely possible to transition from just living paycheck to paycheck to actually acquiring long-term assets, like a home. By democratizing access to credit and ownership structures, we can make sure that anyone with the drive to succeed actually has the structural support to become a true stakeholder in the economy. Section 4. Repairing the racial wealth gap. Let's look at solutions to address the historical exclusion of communities of color. To address the documented history of exclusion and asset theft in the U.S., the blueprint outlines several reparative justice solutions. We're talking about direct cash payments and land reclamation. The report also highlights the urgent need to dramatically increase funding for Native-led and Black-led financial institutions because they truly understand their local needs. On top of that, it suggests debt-free higher education for Black and Native students, plus large-scale targeted down payment assistance programs. The goal here is to finally systematically integrate these communities into the asset ownership phases of the blueprint.
The sheer scale of hope in this research is just incredible. The authors make this powerful assertion. By changing these structural systems, we can implement reforms that triple or even quadruple the wealth of those at the bottom of the net worth distribution within just a decade. That is huge, and at the same time, we'd be making massive progress in closing the racial wealth gap.
So, we've walked through the systemic blueprint, right? From basic financial stability all the way to absolute wealth protection. And we've explored the innovative and reparative tools needed to actually get there. The final question the source leaves us pondering is this. With 101 systemic solutions mapped out for an inclusive economy, which one will you advocate for in your own community? Which step on the wealth timeline needs the most urgent repair in your life? Thanks for joining this explainer, and keep questioning the systems around you.